Hello, everyone. Welcome to another episode of Firm Returns Weekly. This week, we're going to have a look. Let me share my screen. This week, we're going to have a look at some news from Aviva and tinyBuild. So let's start with Aviva, which released their interim results for the first half of 2023. And I've put together some highlights here. So at the group level, we heard that operating profit was up 8% to £715 million compared to 661 million in 2022. And on a per share basis, this rises to 10% due to the share buybacks. So this is, and on a per share basis, it's 19.9 pence versus 18.1 pence. So a very positive improvement there. Cash remittances, which, just as for anyone who doesn't know, is the money paid to the parent by its subsidiaries. Kind of think about it a bit like dividends. They were up 3% to £825 million from £798 million in the first half of 2022. And then total shareholder capital returns were £876 million, comprising a £576 million final dividend for 2022 and a £300 million share buyback. And then we also heard that an 11.1 pence per share interim dividend has been declared, which is up 8% on the prior year interim dividend of 10.3 pence. So that's what we're getting paid later this year. And then we're going to have a little breakdown into the three segments that they categorize the business as, or break the business into. So the first is insurance, wealth, and retirement. Second is, and when it says here insurance, here is more specialist insurance, things like life insurance, health insurance, etc. And then they have separately, and this is distinct from general insurance or property and casualty, which is the UK and Ireland, which they break down further into UK and Ireland and Canada, the two main markets. So yeah, let's have a look at the insurance, wealth, and retirement segment. So the value of new business, VNB, increased 7% to £319 million compared to £297 million in the first half of 2022. Operating profit fell 13% to £426 million compared to first half of 2022 of £500 million. And this comes as lower contributions from the wealth business outweighed higher contributions from annuity and equity release and health and protection. And apparently from their earnings call, they said that the drop in the operating profit from the wealth business was predominantly due to investments they've been making in the business. So not overly negative. And the thing with, I think the wealth business has something like 4.3 billion pounds in net flow, so it still is bringing in new money, but it is down from last year. And the other aspect here is that obviously on a net profit basis from the wealth business, it will be considerably lower. Maybe not the wealth business, but certainly it's been a difficult time overall for anything to do with asset management, really, because of the movements in the market, and that's obviously going to flow through to the net profit. All of it being temporary, like they're not actually cash losses per se, but it does, those kind of market movements do affect the net profit. But actually, I think the net profit for the period, I think a lot of that came in the previous year, and I think the net profit was positive. Can't remember exactly, whereas last year it had been negative. So yeah, things seem to have flowed through on that front as well. But yeah, and then the annuity and equity release has benefited because of the increased interest rates, which has driven new business in, and given them better, made it more profitable. This increase their interest margin between how well the annuities can be covered by the assets they buy to cover them. And I mean, that's something similar for other aspects of business, but health, we know has seen a rise as well, unfortunately, because of the NHS not the National Health Service here in the UK not doing so well recently since the pandemic. It wasn't doing great before then, but waiting lists have reached sort of pretty crazy levels, and so if you want to get any kind of fairly routine procedure done, a lot of people are having to go private, and so health insurance has seen quite a bit of demand. And I think health is only a very small part of their business relatively, and they are a third player in the industry, but significantly behind AXA and Bupa. I think are the first and second players in the UK. But I think they saw something like 57% growth in the first half, so pretty crazy growth. But yeah, like I say, so it's still only a pretty small part of the business, but obviously now a source of growth. And finally, for insurance, wealth and retirement, we have the cash remittances, which were £714 million, up from £706 million in the first half of 2022. So, as just to remind you of what the overall figure was for the group level of 825, you can see that a large part of this comes from the insurance, wealth and retirement. The vast majority, in fact. So, but as you'll see on the operating profit level, they haven't, let me just think, on the operating profit level, 426 compared to the overall operating profit of 715, still more than half, but it's nowhere near as large as the cash remittances that were paid out. So it's a bit more balance between the segments on an operating profit level, as you'll see. So the UK and Ireland general insurance operating profit grew 41% to £230 million. So yeah, another big chunk. And this yeah, and so up 41%. So yeah, big growth seen in the general insurance segment for the UK and Ireland, from £163 million the previous year. And this is largely as the business benefited from improved investment income. So yeah, it's been getting much better returns on the assets that it's using to cover the liabilities. But of the revenue that they've brought in, so the margins have decreased somewhat due to the inflationary pressures and sort of increased claims frequency from the previous year. So this is seen in the core figure, the combined operating ratio, which worsens slightly to 96.3%. So still below 100, so still profitable. And the previous year it had been 95.3%. But yeah, this should, as they're taking some mitigating actions, things like, I believe, something like across the industry, auto insurance premiums are expected to go up something like 20% this year. So I expect a lot of that's going to flow through in the second half, and that will obviously then cover some of the inflationary costs of repairing vehicles, or covering the paying out the claims. Yeah, and then so we should hopefully see the core ratio come back down again, and their overall target for the overall general insurance business, also including Canada, is to have it below 94% for the whole group. And I think it's like 94.3% average for the whole group at the moment. I can't remember. I haven't got that written down. So a couple of more points on the UK and Ireland general insurance. Gross written premiums increased 13% to 3,219 million from 2,840 million in the previous year, with strong growth in both personal and commercial lines. In both the direct to consumer and not direct to consumer, both the personal insurance and business insurance, effectively, were both saw strong growth. And then finally, the cash remittances were 61 million, up from 59 million the previous year. Yeah, much smaller than the cash remittances paid by the insurance, wealth and retirement segment. And I need to dig a little bit more into this, and I will do when I'm currently reading through and doing another bigger update on the company. Definitely want to dig in and try and understand a bit why there is such a disconnect between the operating profit being fairly balanced between the general insurance. You'll see when we add together the totals from Canada and the UK and Ireland, they're pretty comparable. In fact, they even exceed in total the insurance, wealth and retirement, but the cash remittances paid are significantly less. So I'm guessing part of that is keeping, and I expect this, I'm probably answering the question. This is my assumption, is that they're actually retaining that within the subsidiary and reinvesting it into new growth, because they're definitely trying to grow the general insurance businesses, I think, because it's quite capital light, which is something they're trying to. Okay, and something I didn't quite realize actually is they did I haven't got the slide up here, but in their earnings call, they actually, in the slides they presented, they actually showed that it was something like close to 60% of the business is actually capital light. So some of that is in the wealth business, and some of that's in and the rest of that's in the general insurance business. And this is contributions to, I guess, operating profit. I can't remember the exact figure they were using to break it down. But yeah, it was something like 60% came from capital light sources, and the other sort of 40% came from the capital intensive sources, were basically the annuity business. That seems to be both the personal and bulk annuity businesses are quite require a lot more capital, which is still obviously profitable, and they're really trying to build and capture a lot of the opportunities that are in the bulk purchase annuity space, BPA space right now. And with all these, now the interest rates have reached positive territory, and a lot of these corporate pension schemes are now in surplus rather than deficit. They're using this opportunity to de-risk their balance sheets, and they basically pass off the scheme assets to large life insurers like Aviva and other ones like Legal and General and so on. So Aviva is now trying to capture that, but the point being that it's requires a lot more capital, and so there are limitations on how much they can invest in and how much it can grow. the rate of growth compared to general insurance, where they don't need to put as much capital into it to get the same kind of return. And generally, I think capital light businesses are more favorable, just because of the higher returns on equity, etc., that are possible from it. Yeah, the less amount of shareholder capital has to be tied up. So that's the UK and Ireland general insurance. Let's just quickly look at the Canada general insurance. So operating profit increased 19%, so not quite as much as the UK and Ireland of increase of 41%, but I'm guessing that was a bit more to do with a negative environment the previous year, for comparison, more than it being exceptional this year. And this said it increased 19% in Canada to 240 million. So this is pretty comparable to the UK business of 230 million. And in the first half of the previous year, it was 201 million. So yeah, and this is also because of the business benefiting from higher yields on assets. So as with the UK and Ireland general insurance business, the core worsens slightly, but still remains very strong at 92.8% versus 91.8% the prior year. So yeah, pretty phenomenal figures for the Canada business there, even after the slight increase in the core. Yeah, and I don't know what I mentioned, but yeah, you basically want it to be anything below as 100% means that, so core is effectively telling you the percentage of revenues, I guess, that, or the percentage of the premiums taken that's getting paid out in claims or expenses. So you want it to be less than 100% in order to be profitable, and obviously the lower, the more profitable it is. So it's consistently remaining below 100% in across the whole business, and Canada is particularly strong with 92.8% and 91.8% the prior year. Yeah, and gross written premiums increased 11% versus 13% for the UK and Ireland. And they increased 11% to 2,055 million versus 1,854 million, with similarly strong growth across personal and commercial lines. So yeah, you can see because of that increased core ratio there, they are getting a similar operating profit from around about 2/3 of the gross written premiums. So yeah, it's that's a real testament to the profitability of the Canada business. But again, cash remittances grew significantly, but from a pretty low base. So they grew to 36 million from 14 million the previous year. And yeah, and those, again, just like the UK and Ireland general insurance business, quite a lot lower than the insurance, wealth and retirement. Factor of 10 or more than 10 lower, factor 20 basically for Canada. And this, I'm guessing, I believe, and I'll verify, is because they're keeping the profits, the cash generated within the business to reinvest and try and grow their general insurance business overall. So yeah, that wraps up Aviva, their interim results. I've included a link to go and have a look if you want. They also have a recording of the earnings call, which is worth a watch. Some good questions asked in there and some good clarifications and so on. But yeah, let's now move on to have a look at a couple of updates from tinyBuild. The updates are largely, we've had a couple of new launches, new game launches in the week, which are Black Skylands and Hello Engineer. And then I just had a little update on Graveyard Keeper, which is not a new game. It's been around for, celebrated its 5th anniversary last week. And I just wanted to give you some stats on how it sold in that week when they put it on sale. They gave it with an 80% discount. So pretty incredible to see how well that game still does. Anyway, let's start with Black Skylands. So we saw Black Skylands leave early access with its version 1.0 launch across PC, Xbox, PlayStation, and Switch on Tuesday, 15th of August. From the Steam stats, it certainly seems to have done well, appearing in both the popular and hot release lists for 3 to 4 days following launch, and achieving a new peak player count of 1,123 at time of writing. I think and which, as I said, looks set to be beaten over the weekend, and I'm pretty sure it was. Follower numbers have seen decent growth with 26,324 before release and 28,564 at the time of writing. The game also featured in the top 100 best-selling games on Steam for several days, and the day after release, it was in 87th place. Well, that's what I saw anyway. It might have been higher at one point. I don't know, but that was the highest I saw it at. But it's still very good. So one slight negative is it appears some of the people who played the early access version of the game weren't happy with the version 1.0 changes, which pulled the recent review score down a little. And I said I expect this will smooth out over time as new players add their voices to the mix. But yeah, I think from what I understand, it wasn't just a small change. They basically changed did an entirely new story, entirely new narrative for the game in its version 1.0 launch. So it's quite different in terms of the story and narrative to the original, to the early access version. So yeah, obviously some people preferred the state of the game, the way the game played, the mechanics of the game in early access to the version 1.0. But yeah, like I say, once these few people that are a little disgruntled get drowned out by the new players that are obviously enjoying the game from their reviews that I've seen, I expect the average will smooth out and it'll head back towards the sort of figures that it was on before, which I think was something like 86%. Maybe I misremember that, but it was certainly over 80, whereas it's been more or less sort of in the last 30 days, it's been in the 70s because of the some of the negatives from people, but still overwhelmingly positive. Or well, that's in Steam terms, it would be very positive, but certainly more positive than negative. And then I also just finally said here that things are looking promising for the game's success on other platforms, as it seems to have caught the attention of console-focused influencers. The channel linked in the video below already have a review in the works. So yeah, I've got a little video from a channel called Switch Up. They're a pretty big channel. Some of their game reviews have done sort of 500,000 plus views on YouTube, so pretty big channel. Typically it's in the tens of thousands though. I know an average video, like I think this one did something like 40,000 or something. They're sort of weekly best new Nintendo Switch games. But yeah, they're very much focused on Nintendo Switch, this channel, as you could guess by the name Switch Up. But yeah, they included the game in their list of new Nintendo Switch games coming out, and I'm sure there are other channels that have done that similarly included it. And I know from the comments that underneath the video that they've got a new that they're doing. They've done a review, so presumably they got given a review code. They've done a review and they'll be launching that this week. So that might be something to have a look out for. And I might have a look at including it in the next week's, or as I'm recording this on Monday, the end of this week's weekly newsletter, just as an update. Yeah, and then like I say, we also had the launch of Hello Engineer. So Hello Engineer got off to a fairly slow start on Steam after its launch on Thursday, the 17th of August, which isn't surprising considering the game was way back in the wishlist rankings prior to launch. I think it was over 1,000, as in the place greater than 1,000th place in the list. And its peak player count since release was just 96 at the time of writing, and I think it still remains 96. And it currently has 2,656 followers and 49 reviews. But 49 of these 49 reviews, 83.67% were positive. So it's been well received by those that have played it, and there's been no mention that I've seen of any bugs or performance issues. It's not quite had the opening success of some of the other games we've seen launched recently from tinyBuild. Perhaps the game concept wasn't quite what people were after. Certainly seems to be a technically good game. You know, they've released it and there doesn't seem to be any bugs, any issues. It needs to be quite performant from what I've seen, but just hasn't really generated much hype or sort of traction so far. But yeah, as I've said here, the publishing team have been taking steps to try and boost interest, including the application of a 35% introductory offer, and the game was already pretty reasonably priced at something like 14, 15 quid, and 35% off takes it below 10 quid, opening introductory offer price. And this is valid for a week until the 24th of August. So we'll have to wait to see if this helps give it some momentum in the coming weeks. So far, not really, because like I say, that peak player count hasn't been bested. But yeah, something that's worth mentioning is that the game simultaneously released across consoles, as you'd expect for a game within the Hello Neighbor franchise. And as we know, the Hello Neighbor games have a much greater following and player base on consoles than they do on PC. I think Hello Neighbor only has something like 7,000 to 8,000 reviews on Steam, but we know that it sold like something crazy like 70 million copies across all platforms. So yeah, it's a bit of a disconnect. It seems certainly more of a game on consoles than on PC. So it may be that there's been a lot more sales and many more players of Hello Engineer on consoles than there have been on PC. So we'll have to wait to see if management discloses anything there. We don't really have any other than maybe the reviews on the Xbox store, but I don't think many people put reviews on there. Other than that, we don't really have any stats to gauge how many people are playing it on the consoles. So we'll just have to wait to see if management comes out with any statement there on how the game's been doing. But one thing to think about here is that I'm pretty sure, I don't know what the budget was, but it certainly seems to have been quite a bit higher budget than some of the other games that we've seen launch, like Black Skylands, for instance, or Punch Club 2. I would expect Hello Engineer had a higher budget than that, just from the look of the game. But so yeah, and the price tag and what have you, I might be getting that wrong, with but yeah, it certainly seems to have a higher budget visually, it seemed to, compared to some of the other games. So it is a bit of a shame that it hasn't sold as well, because presumably there's a higher threshold for it to cross before it get into profit. But like I say, hopefully that's because it's done well, done better on consoles than it has on PC, and they'll cover it. Yeah, moving on to some good news. Something else I wanted to highlight is the enduring power of Graveyard Keeper. This week, the game celebrated its 5th anniversary with an 80% discount that put it back into the top 20 best-selling games list on Steam, as well as the trending list, where it has remained with a daily peak concurrent player count above 6K. I'm pretty sure it's still in the trending list, and it's gone over 7K now, the peak daily player count. I think on Sunday night, it just seems to be continuing to rise. I'm sure it will trend back down as it has done previously, but you look at the overall chart of player counts, and you can just see, I guess, coinciding with new updates, with sales, what have you, they have had continued peaks, new peaks in all the years since launch. And I captured it when it was I captured the screenshot of it when it was in 19th place in the top selling games list. So I mean, it did similarly well to I'm Future that's just launched, for instance, and Punch Club 2. Both, I think, got into the, maybe, I can't remember Punch Club 2, but certainly I'm Future got to something like 19th place as well. So it's still doing similar performance as some of the big games that, or the more successful games that are coming out, have been released now, and it's still doing that in 5 years after its original release. And granted, selling it at an 80% discount, which is like £3.50 or something for the game cost. But that's even when you take off the fee, 30%, whatever, it's all profit at this point. So because they've well and truly paid for the development expenses at this point. So yeah, very, very positive. And we actually got a tweet from Alex Nishi-Porshik, CEO of tinyBuild, telling us that every year since Graveyard Keeper's launch, it's sold more than the previous one. So yeah, it's just a game that has been growing in success year after year, and just to really showing you the power of the back catalog, and that it's, with the really successful games, the ones like this that can be played pretty much infinitely. There's not any, there's this, it's infinitely replayable. People can play it. People do play it for thousands of hours. With these kind of games, there isn't the same kind of decay in their sales that you see with the average game. So yeah, this is why the company is trying to really pivot its focus and move its focus towards games that really can be played for very long periods of time and don't really see the drop off in sales, because it means you end up with a diverse and performant back catalogue that can sustain ongoing revenues for many years. And we're talking, Graveyard Keeper might still be doing these kind of numbers at its 10th anniversary, for instance. No reason why not, really. It's still doing well at its 5th, considering the average game pretty much drops off within the first 6 months to a year. And on that note, we actually had another article from Alex released last week, entitled Chasing the 1,000-Hour Game. And in this article, he describes strategies that tinyBuild is pursuing to create games that can be played for more than 1,000 hours without a AAA budget. I've got the article open here. So it's quite an interesting one. It's talking about it breaks into, you can effectively divide the article into two halves. One is talking initially about multiplayer and how the various things, like various tactics you can use to make a multiplayer game sort of infinitely replayable, without having to do what a lot of the AAA games do, which is have development teams grind and put out, have hundreds of developers working on it and putting out more and more content to keep people coming back to the game and engaged, like you kind of see with World of Warcraft, for instance, and some of the other big Blizzard games. And something he mentions here that's quite interesting is the trap of having a leveling system and how that ends up naturally limiting your game. So one of the key points to do is to not really define a win criteria for the players that they reach in the higher levels, whatever, not having progress defined by the game developers. Instead, it should be flexible and the user can choose their own goals, their own definition of it, and craft the game. So you can give them missions to do and so on. And he talks about, and a lot of this relates, I think, quite well to Deadside, which is a game I've played from them, having missions that the same mission can be replayed in multiple different difficulties and having lots of random components to it. So it just adds a lot more replayability to that's effectively the same content without them having to do a lot of work on adding new content each time the game is played. You're just putting in slightly more challenging enemies in there with the different levels and better loot at the end, or what have you. And the kind of the flexible, and he talks also about creating games where you could, a new player that is skilled at the game, for instance, someone who's, let's say, you're talking about a first-person shooter game, they've played a lot of first-person shooters and they're naturally quite good at it. They can come in and if they can get hold of a decent gun, which is not limited by having to unlock at a certain level, if instead it's just something that they need to either save up to buy, or they can kill someone else, get the gun off them, or complete a mission, a more difficult mission, and get a really good gun, is something that realistically they can go from zero to hero. That's a key component of the game, so people don't arrive at the game and find that they're being overwhelmed by people that are not necessarily more skilled, but they've just put hundreds or thousands of hours into the game and then just become indomitable as a result. There should obviously be, people should feel progress and rewards from having invested time in the game, and this comes in the form of, they understand how to use the weapons best, or they know the best areas on the map to go to, and all that kind of stuff. But it should technically be possible for new players to figure out a way to beat the best players in the game still, whether that's through patience and camping out or something like that, hiding in a bush waiting for them to come around the corner or whatever. Should be a way for them to still beat them. They should be a level playing field, really, and it just comes down to the skill of the players. And and there needs to be a way for the new players to get the best gear relatively quickly if they're skillful enough. And there's loads of other good stuff in the article here as well. It gives lots of examples of how to multiply content, and talking about sort of systems versus content, and how adding a new system, if you've got 10 different systems in the game, you add another one that could actually double the amount of time that user can spend with it, because you've just added that new dynamic, has a multiplicative effect. But if you just have, you know, content in the form of like cutscenes, whatever kind of stuff, and you add another hour, another hour to it, or another bit of content, all you've done is add 10%. So you just have to keep putting in more and more effort to do it, and this is what you see with some of these AAA games and so on. Yeah, and then as I mentioned, random number generators and so on. Yeah, but yeah, overall very good. And he also then talks about how you can apply a lot of these same kind of principles to single player games, and how one of the big areas that's had this replayability and longevity is in the cozy sort of game category, which is what something like Graveyard Keeper would fall into, or Iron Future, Potion Craft, whatever, the games that can be played for long times without losing, without the player losing interest, and without the player running out of things to do. You know, they can just keep on going. Yeah, so yeah, I recommend giving that a read. And another very interesting one, following on from the previous week, I think previous week or maybe the week before, article where they broke down the successful launch strategy they employed for Punch Club 2 compared to the original, which also had a very unique marketing strategy. So yeah, I recommend give both those a read. Both very interesting. But yeah, I think that is all. So I will see you all next week for the next update. All right.